Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is Joe Mazumdar, editor of Exploration Insights. Joe, welcome back to Kitco.
Thanks, Paul. Thanks for the invite.
You're more than welcome. Third quarter results are almost all in, so I've been crunching some numbers this morning. Gold companies have already returned 28% more to investors this year than in 2024, as capital returns increased to almost $9 billion, comprised of about $4.9 billion in dividends and $4 billion in stock buybacks. Joe, let's start here. What are your thoughts about how producers are allocating their capital bonanza, the capital bonanza they're getting from these high metals prices?
So when I looked at it in the first half of the year, I saw that there was a few companies, like if we look at, let's say, a shareholder return with the amount done with the share buybacks and dividends, take that amount over free cash flow, which is operating cash flow net of investing activities, and see what kind of proportions actually given back to the shareholders. Companies like Newmont in the first half were given over 60% back to shareholders in the form of buybacks and dividends. And what Barrick has gotten up to is just up to about, they were at 40% for the first half versus the 60% plus that Newmont was doing. But now they did about 46%, in this last reporting period. So they're going up, seeing basically probably their competition, and seeing that shareholder returns work for basically getting a better price on your stock, especially when a lot of your projects are in potentially geopolitically risky areas. So your growth, which you do have growth, one of the tier one assets that you do have is 4 Mile, which is, we know is a generational asset, or potentially multi-generational. And then the other growth is Pakistan and Reko Diq, and then, some of it is Lumwana expansion. The latter two would be mostly copper than gold. But 4 Mile is probably one of the best discoveries out there in quite a while. So yeah, I think that Barrick got the hint, and they've been increasing the amount of their free cash flow that's actually going back to their shareholders, which probably, that is definitely a good thing, as it's done well for Newmont.
Well, Barrick announced an increase to their base dividend and a bonus dividend. I think it totaled 17.5 cents per share announced for this quarter. Let me be a little bit of a pain in the ass, Joe. You said Barrick's got the message. Now, has Barrick got the message, or has a roadblock to that message gone?
Oh, you mean in the form of Mark Bristow? Well, the thing is that they're generating more cash flow, one, because of the commodity price, two, because their costs have gone down, and they're actually probably one of the few producers that actually increased their production in Q3. So all of that going together, they've generated more cash flow. So whether they would have done this with or without Bristow, I don't think the cash flow thing would have changed. But taking that and saying, am I going to use this all for new capital projects or other things, or back to dividends? I don't know if Bristow was a roadblock in that. And I don't have an inside baseball sort of take on this, but my impression is that there might have been some push to say, by their shareholders, their big shareholders, to say, hey, why aren't we getting the return as these other companies? And it might be the geopolitical risk that you're taking on in all these new projects, so hence maybe we should split this. And maybe that's something he never wanted to do.
Okay. Now, looking at the sector overall, the pace of share buybacks seems to have slowed, as perhaps the higher gold price and improving financial performance of companies have seen their share prices post strong gains. Joe, does this perhaps suggest that many issuers believe that their stocks are now more fairly valued?
Yes, that would be the impression. But now, what we should be seeing, and we are seeing a bit of that, is M&A. So using that cash, but more so using your paper, such like Coeur did with New Gold, to buy something and get growth, get what everybody wants, which is a higher profile in terms of liquidity, lower cost of capital because you're a bigger company, bigger production profile that lets you divest some marginal assets, that whole process. So we're still seeing that. And Coeur bought probably at the beginning of the cycle with getting Silvercrest, and now they're buying again. Both of those were all share transactions.
Okay, we covered Coeur's acquisition of New Gold last week, and of course Fresnillo buying into the Abitibi Explorer probe. All-in sustaining costs continue to rise, but at a flatter rate. The average among the majors was $1,569 per ounce in the quarter, up 1% from June and 4.5% up from a year ago. With higher gold prices, this saw their all-in sustaining cost margin increase to an average of 56%, some $1,970 per ounce. There's a much greater all-in sustaining cost spread in the mid-tiers than with the senior producers. Joe, costs seem to be more or less under control. What do you think could potentially see them run again?
I would say labor costs have been an issue, especially with the ones that are in North America. Another issue would be if the oil prices come back, which they haven't. So that's been good for those companies that are overexposed to diesel. And I would say that the declining grade of some of these deposits mean higher throughput, bigger processing plants, more drain on power. And we've seen electricity costs in the States go up. And so that would be another exposure that could raise costs for some of these companies that are very energy intensive because they're dealing with lower grade and potentially harder rock.
Okay, now, as mentioned, share prices have been soaring this year. Let's talk a little bit about you, Joe, and the Exploration Insights portfolio. What's your investment strategy and how is that evolving as we've come into this very, very strong metal price environment? Share prices have responded. Are you sort of buy, sell, or hold? Any profit taking going on?
Well, the thing is that what we're Exploration Insights, so we're not buying the Agnicos and the Barricks or the GDXJ and stuff like that. We're benchmarking ourselves to it, but we're not buying it. So we're mostly still doing exploration. And in this market, exploration, the cost of capital for these companies has gone down. The market caps of these companies have also gone up. And so the question is timing with respect to some of these companies. You'll have to pay more right now in terms of the cycle than you would have had to pay maybe 6 months or a year earlier. And is that worth it? Because if the cycle keeps continuing, yes, it will be worth it because you've generated another base to this valuation. But if it turns, these are the companies that will turn first. And their cost of capital will go up more. So what I've been seeing is, thankfully, with a few of the companies that have been raising in this market, even though I thought that they might have technically been well-funded, I guess no non-cash flowing junior is ever well-funded. So they're still raising money, but they're doing it with no warrants, with a small discount to the current price. And so that says that there's still people interested in these exploration stories. And so, where we've done well continues to be on the exploration side because we're actually interested more in the alpha part of the return than in the beta part.
Okay, thank you for that. Let's talk about silver exploration in Mexico. Vizsla Silver announced a feasibility study on its Panuco silver gold project in Jalisco to produce an average of 17.4 million ounces a year of silver equivalent for 9.4 years, following an initial capital investment of $339 million. Joe, it would seem to be a great time to be thinking of bringing new silver production into the market. How does Panuco stack up as a silver project? We saw a couple of big projects brought into production over the past couple of years, 17.4 million ounces a year. This potentially would seem to be another one.
Yeah, and they've done well in terms of M&A, whether it's Silvercrest with the Las Chispas, the turnaround at Gato, Mag Municipio, those have all been acquired. And so for this company as well, they probably have to take it into production and get through that permitting stage, probably to catch a bid in this market. Because there's still been some M&A for underground silver miners that are producing, but the Fresnillo probe M&A suggests that even the Mexican-based guys are looking for diversification outside of Mexico. Again, my problem with the Mexico thing is that would anybody from outside of Mexico with no assets in Mexico that want silver exposure actually go and purchase a company in Mexico? That would be, for me, a good sign. I haven't seen that yet.
Okay, a good sign that has come out of Mexico is Silver Tiger Metals, which just received the last permit they need to build their open pit mine operation at the El Tigre project in Sonora. This marks one of the first open pit mining approvals from the Mexican government in several years. Joe, obviously this bodes very well for Silver Tiger and their plans to advance El Tigre into production. Does it bode well for other open pit developers, perhaps like Discovery Silver, for example, with its massive Cordero deposit?
It might suggest to the market that that the probability that they get permitted is higher. I think it's going to be on a case by case basis, especially with an open pit. Maybe less so with an underground, but definitely with an open pit, it'll be on a case by case basis, and that'll be case by case because of the local impact, socioeconomic impact, but also state by state. Some states that are more mining friendly, like Sonora, that's probably a place that would push for a project like that. It might not get pushed in another state that mining is not such a big deal. So yeah, I would take it as definitely as a positive, but knowing that where it's actually located and which state it's in, and the local, probably it seems to be less opposition to these sort of projects. Well, to this one specifically, whether that's the same for Discovery Silver's asset, I don't know. But I think Discovery Silver, I don't know why they still have that name, but they're well on their way with their Timmins asset, and basically have already switched to becoming a open pit gold in Ontario sort of company now.
I think Discovery Silver is in the process of changing their name to just Discovery, which, while it makes sense, I think is a bit of a head scratcher, because if you're new to the space and looking to find out about companies, you tap in Discovery into Google and you get a whole bunch of stuff that's got absolutely nothing to do with mining at all. Okay, Newmont sold 6 assets last year, and we're beginning to see that really sort of coming through strongly with the mid-tier gold producers. We saw that in this third quarter results, some strong results from Orla Mining, for example. Discovery is another company that really benefited from that. Another company is SSR Mining. They announced a 12-year mine plan this week for the Cripple Creek and Victor mine in Colorado that it acquired in February from Newmont for $100 million in cash and up to $175 million in additional milestone-based payments. Production through 2030, it said, would average 131,000 ounces per year. The company said that with the strong metals prices, the transaction closed in February has already paid off that initial $100 million installment. Joe, has SSR, formerly Silver Standard, has it done it again? It purchased Marigold in 2014 and turned that into a keystone asset. Will CC&V become another one for the company?
Yeah, I mean, the thing is that they've done a good job in terms of taking an asset that's been in production, fully permitted, and it's easier to advance, less risk. Low grade, but it's run of mine, and so there's not a lot of crushing circuits, and your operating costs aren't as high, so you can mine a lower grade and stick it on the heap leach pad. The overall recovery is like 50%, but basically they're just mining dirt, sticking it on, and generating, I think they want an NPV 5% of $824 million at a gold price over 30,200. So Yes, that project for them would make a lot of money, considering the $100 upfront payment and potentially $175 extra milestone payments. But importantly, as well, that we have to note is that there's, because this mine's been in production for so long, there's about $500 million of liabilities if this mine plan that they're putting forward goes through. But importantly, SSR Mining is only responsible for about 10% of it, and Newmont's still responsible for 90% of it. So the problem with acquiring some of these projects and mines that are that big companies are letting go is that you do get limited permitting risk and that lower capital escalation risk and all this. But then the big issue is that the liabilities, who gets to hold those, and the fact that Newmont took 90% of that long-term liability is a big positive for SSR Mining.
Okay, well, congratulations there to SSR. Let's turn to base metals. Marimaca Copper obtained environmental approval for its $590 million Marimaca oxide copper project in Chile from the environmental authority there. An August 2025 feasibility study detailed production of 43,000 tons per year of copper cathode for an estimated 13 years from a heap leach SXEW operation. Marimaca aims to begin construction there in 2026. Joe, there are not many mid-tier copper producers. Why is that? And is there room for another one?
There's definitely room for another one. I guess with respect to copper, it's probably hard to find the projects that would start a mid-tier, but I mean, we do have the Capstones and some of these other companies sort of filling in that space, Sandfire. But you're right, there's not a lot of them. These sort of mines, this sediment-hosted, sort of volcanogenic-hosted oxide copper mines that they have in this part of Chile, works well for companies like the size of Capstone and potentially Marimaca as well. I mean, infrastructurally, there's not a lot of projects that are better off than Marimaca. I've been to it maybe about 8 years ago, really close to the coast. It's got access to water, which is obviously huge for Chile, grid power, near the roads, we all complain about, and justifiably, the higher copper intensity, capital cost intensity of these projects, because of the issues with Quebrada Blanca too. This one has a low capex intensity, and so it's a very viable project. So yeah, it's one of those few that look very, very good economically.
Congratulations there to Marimaca. Now, given there's few mid-tier copper companies, it does seem that Marimaca will have to build it. There's very few people that could potentially come in with an M&A bid. Would that be your reading?
Well, I think a lot of these projects nowadays, unless somebody has a comparative advantage in them, like this would make a lot of sense for Capstone to take. But we also got to think about the ownership, because private equity, Greenstone owns about 22% of it, and the South African fund, Assore, ASSORE, they own another 16%. So that's 40% roughly with these private equity companies. And so is this what they want? So it's not only like if they catch a bid by some other company, but these guys might say, well, let's just build it ourselves because this is an easy project to build. And once it's in production, it'll be worth a lot more. And so I could see them saying that and saying, we've been in this for, 10, 15 years. Not Assore. They took over, I think, Tembo's equity stake. We just got into this. Let's take it forward and put it into production.
Okay, private company Cove Capital aims to develop one of the largest known tungsten resources in the world within 24 months at the northern Katpa and upper Karatki deposits in Kazakhstan. Cove has secured a deal with the government. It's also secured financial and general support from the US government, including a $900 million Exim Bank loan commitment towards the estimated $1.1 billion development cost, with US International Development Finance Corporation providing an open funding agreement via a letter of interest. The 2023 feasibility study there detailed production of about 12,000 tons per year of tungsten. Joe, Kazakhstan seems to be a key piece of the tungsten critical mineral solution. You've invested in a Kazakh copper exploration company. What is the attraction of Kazakhstan as a jurisdiction?
Well, Kazakhstan's already a big mining country. I mean, it's well endowed. It's, like when I was there, one of the fourth or the fifth largest coal mines was right near the town I was staying at. It produces about 35% of the global, production of uranium, over 3% of zinc, 3% of copper. And so, I mean, this is a place that's well endowed. Its biggest issue is being landlocked more than anything. So its biggest exporters are like China and Russia get about 30% of their exports, but they also sell a lot to the Europeans. And so that gets around the issue about landlocking. They have smelters, so they processing as well. Electricity is reasonable. A lot of it's coal fired. But yeah, it's pretty cheap. And so you've got infrastructure, you got fast permitting, you got cheap power, so you can mine lower grades there as well and still be economic. So yeah, there's a lot to like about Kazakhstan, and I think overarching that is a more stable government right now, and that same government just met with the Trump administration, I think, this week, and so they're making ties as well, because they probably realize that they're probably a little bit too exposed maybe to China and Russia, and it's nice to have other potential markets. If you take a stable government in a place that's well endowed, and with the luxury of good infrastructure and decent permitting, it can work out quite well. And I think right now, it looks pretty good for Kazakhstan.
I think there's a lot of good factors coming together there. You mentioned the country's landlocked, two of its neighbors, China and Russia. You mentioned that they've recently met with the Trump administration. They seem to be trying to change their alignment or adjust their alignment to not be so dependent on China and Russia. They want greater exposure to the US, and the US is responding, is reciprocating. That being the case, when the conversation turns to uranium, you mentioned that I think that Kazakhstan is one of the world's leading suppliers of uranium. But when the conversation's on uranium, Kazakhstan, in the West at least, is always viewed as a risky jurisdiction. Or is it more the case that US and Canadian developers are spinning a narrative for their own benefit?
Yeah, I mean, the thing is that it's not quite a parallel, but like if we take nickel, a lot of the oversupply is from Indonesia, and what people will tell you, and probably justifiably, a lot of this is environmentally probably negative in terms of how they're mining it and where they're mining it. This is low cost nickel, and people will buy it, whether it's the Chinese or Tesla. Because if you're a supply chain manager, your job is based on, the cost of the inputs, not that you're going out of your way to buy all green inputs or anything like that. And that goes for uranium as well. So if you're running a nuclear power facility and you're the supply chain manager, you're going to pick the cheapest form of uranium you can get from wherever you can get it, as opposed to paying, 50% more, 25% more from a domestic source. And this is globally the issue, is that we have a market price for these commodities, but sometimes that market price doesn't incentivize people to build. And so we keep depending on these supply chains that maybe the government doesn't want us to depend on. But, there's really no choice because, we can't increase our prices. So that's a dichotomy that we're still trying to figure out. We can give, especially the U.S. and the European Union, a lot of cheap capital to these projects to get built, But right now they can't change the price of the commodity because that's still a market price. And so I don't know of anybody willing to pay that premium to get a supply chain friendly source of a commodity. I mean, we're sort of seeing that with rare earths. We might see that with antimony and these security minerals that feed into specific industries that that in the U.S. The administration's worried about, whether it's the chip industry or whether it's the military. But it won't be for everything, and so that's still an issue that we're dealing with here.
Okay, with Coeur potentially bringing a large source of tungsten to market in, let's say, 24 months, does that pull the rug from all the tungsten juniors that have sprung up to restart former tungsten mining sites in the United States?
Yeah, I mean, the thing is, it'll be like rare earths in the sense that 83% of the tungsten production comes from Russia and China. And so people will keep saying, well, we can't be overexposed to this, and justifiably so. Where else are you going to get it? And does Kazakhstan fall into that, oh, this is a good place we can get it? Or does Kazakhstan fall into the Russia-China, part of it? If Kazakhstan falls into the, hey, this is a good place to be, with the meetings between the U.S. administration and Kazakhstan, then that falls into a different basket. So this would be a good source, in terms of supply chain to get your tungsten, because the administration is friendly, to the West.
Okay, interesting item here. Sibanye-Stillwater agreed a $250 million settlement with Appian Capital Advisory, arising from the termination of a $1.2 billion transaction to acquire Atlantic Nickel and Mineração Vale Verde in January 2022. The UK High Court ruled in 2024 that Sibanye-Stillwater unlawfully terminated the transaction and is liable for damages. The court was due to determine these this month. The settlement is about 18% of the Scotch deal value. Joe, who do you think was hedging the court's award here? Was it Sibanye or was it Appian?
Well, I mean, the overhang of this, has been an issue. This was for, I believe, was it Santa Rita, the nickel project, and Cerote is the copper mine, and that was the $1.2 billion. These guys at Appian were popping the champagne corks and stuff like that because of the transaction, and then because of what I think was a geotechnical event at Santa Rita, that Sibanye said, okay, this is a material adverse condition, and so the agreement's null and void. And so they said that we don't have to pay anything. Obviously, as you said, in October 2024, the court said that, okay, this was an unlawful termination of this agreement. And from what I can read in the financial statements for Sibanye, they had like anywhere from nothing to 72 million that they could be charged because of this unlawful termination. So even though it was 18% of the actual transaction, I don't think Sibanye ever thought that they would have to pay the entire, amount, the 1.2 billion. But they weren't thinking, at least from what I read in the financial statements, that they were thinking it was going to be 215 million. They were happy probably to pay it and get it out of the way and not have it as an overhang. But from what I saw, they thought that it would be up to like into the 70 millions, not 215.
Okay, interesting. Well, let's end with Bolivia, which has a new president called Rodrigo Paz. He was sworn in last Saturday, which is a move to the right after 20 years of the Movimiento al Socialismo, or MAS party, founded by Evo Morales. Paz takes office with a whole world of headaches to resolve. Bolivia faces an economic crisis, including a debt to GDP ratio closing in on 100%, few foreign reserves, charging inflation, and a large debt repayment due in March. Joe, Paz has to kickstart the economy. Do you expect him to advance a natural resource development agenda to try and do so?
Yeah, I would say that debt to GDP is probably not as big a deal as we think it is because I mean they're at about 100%. The U.S. is 120, Canada's 110, Japan's at 236%. The difference is these companies have a lot of people directly investing in the country. Bolivia doesn't. So the biggest thing Bolivia could do is get people to come in and invest in their country. And the biggest thing they got to invest in is some energy, but mostly resources. Whether it's, I mean, they've tried with the lithium with the Salar de Uyuni, which hasn't worked out too well, but they've obviously got a lot of silver, they've and base metals that they could get developed. The big issue they have is the Bolivian economy. I mean, how people make money. There's a lot of artisanal miners that do small amounts of mining, and they feed a central processing plant. These central processing plants might be government plants, and so the government sells the gold for them, refines it, and sells it for them. And that's what they've been trying to do now. Is basically they've been cashing forward by selling gold forward and basically paying some of their debt. So whether they say, okay, hey, big company, why don't you come in and build some of these big projects? That I don't know. Like depending where you are, a lot of these Bolivians are miners, and that's what they do. And so you would have to, like at Potosi and some of these other places, sort of say, okay, well, this part is for you, and I'll get the part underneath, something like that. But definitely, this president is definitely going to be more pro business than anybody that's led Bolivia in the last 2 decades.
Well, congratulations to Rodrigo Paz, and hope everything goes well. Hopefully that results in a reopening of the mining sector.
That's just one point is that in 2015, like Bolivian exploration in Bolivia in total was about $70 million. Like in 2025, it's like less than 20. So that would be a really good indication of his policies. Like immediate reaction would be are more people coming into Bolivia and exploring.
So a lot of changes to the mining code and other things like that to stimulate exploration and development necessary there. That's it for this week. Joe Mazumdar, thank you very much for joining me once again.
Great. Thanks a lot, Paul.
And for our viewers, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.